Welcome to the Daily Resource Hunter. This is our operator spotlight. Today I have the pleasure of talking with Stephen Bull. He's the Vice President of Strategy for Development and Production in North America onshore for Statoil. Stephen also heads up the integration team in their Bakken business unit. And as we know, the Bakken and a lot of the unconventionals in the U.S. have been booming lately. Stephen, thanks for being here. It's great to sit down and talk with you today.
Thank you, Matt.
We might as well get right into the questions. Before we get into any details, could you tell us a little bit about your company, Statoil?
Yeah, sure. Statoil will be 40 years old this year. We're an international company with we're operations in 41 countries. We've 21,000 employees and about a market cap now of about $83 billion. For the last 10 years, we've been listed on the New York and the Oslo stock exchanges. And really, the company started out on the Norwegian continental shelf as the national oil company of Norway, developing resources there. And since that time, particularly in the last 10 years, we've grown our international portfolio, pretty big. Nearly 25% of our production now comes from the international outside of Norway, producing around about just over 2 million barrels a day. And then we've got pretty ambitious growth targets. We had a 3% growth rate annual on the last 10 years, and we expect to have the same one for the next 10 years going out there. So, the company itself, just the way we see ourselves here in the oil space is that, we are a sort of semi-national and private oil company. And really, our goal is to accommodate the world's energy needs, in a responsible manner. And it's really applying technology that we've developed over the years and creating innovative business solutions.
Sounds good. And that clearly has pointed you in the direction of U.S. onshore operations, which is interesting for you guys as an offshore company. So Statoil in the last couple of years has been part of several newsworthy deals in the U.S. market. Can you tell us a little bit about those deals and where you guys are focused in the U.S.?
Sure. Yeah, we started off our U.S. business really in the offshore environment in 2004. We started on our Houston office, and it was a natural movement from our deep water operations in the Norwegian continental shelf and to move over towards the Gulf of Mexico. And then from 2008 onwards, we actually started to invest in the U.S. shale business. We've been looking at the unconventional space for some time before that, looking at tight gas, looking at coal bed methane, and also into shale. And the deal that we struck there was in late 2008 with Chesapeake Energy, where we acquired a third of their Marcellus acreage portfolio, which roughly is about 700,000 acres to ourselves today. From that time there, we really went to a learning phase. We started to build up an office in Houston and employ locals and expats that we could develop and build as a shadow organization and work with Chesapeake. And in addition, we took out 12 Norwegian secondees who we basically sent up there with an SUV and a backpack. And they went up to Oklahoma City and actually sort of worked up there for 2 years in all the technical disciplines to learn from Chesapeake.
Wow. So everything sort of started with 12 Norwegians hopping in an SUV and heading to Oklahoma, is it?
Yeah, pretty much there. And then it's grown from there. We have in total now, nearly 1.2 million acres in the U.S. in shale. And that really built from on top of the Marcellus acquisition and partnership we have with Chesapeake. And then in 2010, we entered into the Eagle Ford. And that's in a 50-50 joint development with Talisman Energy, a Canadian energy company. And that is a pathway to operatorship for ourselves, where we expect to start operating, starting out through in 2013. And then the last sort of icing on the cake that we've seen recently of our developments in shale has been the acquisition of Brigham Exploration. That was in 2011. A big deal for us, a $4.7 billion acquisition. We took the whole company. I'm based here in Austin. We continue with our operations and our office in Austin, and we have 375,000 acres in the heart of the Williston Basin. We took on the whole of the operating organization and all the personnel, and it's been actually a very, very successful story for us so far.
Wow. Yeah, it seems like you guys were, just starting in 2008 with the Chesapeake deal, it seems like you guys were in the right place at the right time, and now, especially with oil prices where they are, getting into Bakken and getting your production ramped up at this point is definitely a good situation to be in. So I guess this just begs the bigger question. I mean, why is the world's largest offshore operator, a Norwegian company, focusing its primary efforts onshore in the U.S.?
For us, I mean, the onshore business is a big part of our future investments for sure, and it's a big driver for our North American operations. But you got to remember, it is just part of the other aspects of our growth strategy. So we still continue with exploration. We still can continue to build new positions in about 3 to 5 bigger offshore clusters, and that builds on our deep water story. We're the biggest international operator in Brazil. We have large production and acreage acquisitions that we've made in deep water Angola, the Gulf of Mexico. We're a very large owner in that area there, and we see a lot of more exploration upside in these different plays. At the same time, we're still developing, spending a lot of money in our Norwegian continental shelf. The Barents Sea, in particular, up towards the border with Russia in the Arctic, has been a fantastic story for us with some high-impact wells that we've realized over the last year and a half. And we're seeing new partnerships as well with Russia that we'll be developing into the eastern blocks of Russia as well, offshore. We're still building a midstream and a downstream business as well, and we're looking at capex investments of about $20 billion globally for the company. So this is a big part of our business in the U.S. onshore, a big driver locally, but it is part of a bigger picture of investments throughout the world.
Mm-hmm. So it seems as if, like in 2011, Statoil restructured its focus a little bit, and that includes the U.S. onshore operations. Can you explain how that pertains to the unconventional oil and gas shale plays that we're seeing pop up sort of everywhere around the U.S.?
Sure. I mean, globally, our big picture of our strategic beliefs that we have, which to really focus our strategy, is that we're seeing a positive and still developments in oil and gas prices in the future. We think that the outlook for the hydrocarbon energy business remains strong and good, and that when it comes to supply, that we're expecting about half of the world's oil and gas resources will come from unconventionals, and that could come from shale oil and gas. It could come from tight gas. It could come from tidal formations, coal bed methane. It could even come from gas hydrates as well. So we're seeing that having exposure and technology competence in the unconventional space is an important part of our strategy for developing in the rest of the world, moving outside of the U.S. But when we sort of focus back on our U.S. business, when we actually came in here, we saw that the growth opportunities were so large, and actually our U.S. business was so large that we actually split off the North American business from the international portfolio. So we have an executive vice president for the U.S. He's an American. He sits on the corporate executive committee reporting to our CEO. This is important for us because this is, really shows that we are actually a global company with, we're a national company from Norway, but we have actually, foreigners sitting on our corporate executive committee. We have another strategy group led by a British guy who's based out of London. So, I think compare us to other companies, you'll see that we're pretty much more of an international flavor. The other part as well is I think, why we wanted to restructure is we really want to learn and do this right in the US and really get the shale business exactly how we should be doing this. And generally what we do in the company, when we feel we've mastered something, we want to take that technology and we develop it over other areas. We do that in offshore heavy oil. We do it in our onshore operations in Venezuela, in Canada as well. And this is what we expect to be doing here as well in our shale business. Just give you an example of that, Matt. It's we've got a new strategic cooperation with the Russian oil giant Rosneft. And although a lot of this actually is in the Barents Sea, and this will be also there is an onshore dimension to this as well. So there are some shale oil developments which we've seen in southwest Russia in a place called Stavropol. And we actually have the cooperation development there, which you can actually start drilling and exploring on behalf of Rosneft and ourselves to do that. A few years ago, that would have been possible for us, but now that we have the competence and the know-how to do this, we'll be spinning out these kinds of concepts around in the world, we think, a lot more in the future.
Wow. Yeah, so not only are you, learning while you're increasing production here in the U.S. in a great situation, but you'll be able to leverage that knowledge in some of your other international plays. That's cool. So getting back to the United States, which U.S. unconventional deposit are you particularly the most excited about? Or put another way, which do you see having the most potential?
The three areas we're in the Marcellus, dry gas. We have the Eagle Ford, which is liquids and condensate and NGLs, and we have the Bakken, which is pretty much a pure oil play, some gas as well, and NGLs. These three areas, we've got a pretty good acreage positions, we must admit, in those areas, and we feel we're at the heart of those plays. I think all three of them offer something particularly interesting. First of all three really are at the bottom of the break-even curve. If you look along there, check with any investment bank or with other analysts, and you'll see that when it comes to break-even costs, these are some of the lowest plays, particularly for the Marcellus, the lowest gas pricing as well. Eagle Ford and the Bakken as well, excellent when it comes to break-even pricing. So we've feel we position ourselves in a pretty good area for these here. But what we see is that they offer different things as well. Although gas prices remain weak today, we expect them to strengthen in the future. And if you want to be in a dry gas play, then basically the Marcellus probably is the best play you could think of it in the North America.
Yep.
There is a liquid upside as well in West Virginia in the Panhandle there, where we're developing with our partners Chesapeake, that we're seeing a lot more NGLs and potential there. With the maturity of the play, is that actually we're seeing more and more, and that goes over towards Ohio and the Utica Shale. So we're seeing upside here, but basically the Northeast and the Marcellus in particular could be potentially a massive powerhouse for the regeneration of American industry in here. We'll see industrialization of hydrocarbons from either going from gas to liquids, or actually investments using gas-based products as well. We'll see a big development there. Also potential as well to actually start getting pipelines out towards the Atlantic coastal markets as well, to actually switch out from the coal and in towards natural gas. So the Marcellus is a massive, it's a leviathan of an asset, it really is, and it has decades of drilling potential. The Eagle Ford is fantastically placed geographically, so close to Houston, so close to all the sort of the Gulf Coast markets as well. So you get like a very good price differential down there, and also it really does have some pretty amazing wells and some production that are coming out from that area, and and potentially good growth prospects as well. And the Bakken is as well, which so I personally am involved in pretty deeply, working here in Austin and also up in Williston at our office up there quite often. Is that we see huge potential for this. The Williston Basin itself, is much larger than we see just around that North Dakota, around the Williston city itself. You'll see this goes up towards Canada as well, and that we can see that there are many potential new areas and new benches and horizons that we could be drilling into, as well as the Bakken and the Three Forks. There are other horizons which other players are focusing on. So these are kind of these assets keep giving back over time. They really do.
Yep. So I guess just focusing right now a little bit more on North Dakota's the booming Bakken area. What makes Statoil's position there unique?
Mm-hmm. Well, I think the presence that we got in the Bakken, as I mentioned, we got this through Brigham Exploration. And Brigham itself is well known and reputable producer. Had a first class reputation as an operator in the area, and and a real local presence as well in Williston, that we're very proud of, and we want to continue building on this work. How we think we make a difference in the community, I think, is probably through two things. Well, the first is the way we apply technology, and I think the second is our direct engagement in the community. So I think of the technology aspect, which is important to our company. We're investing in a huge pipeline network of over 700 miles of freshwater, saltwater, and also oil as well. Now, what's important here is particularly that we have the oil terminals linked up to each other. That reduces the amount of trucking. But really the big thing here is actually the salt water, which is the disposal water from the wells, and the fresh water that we're using on hydraulic fracturing. I mean, generally, it's thousands of truckloads that we're just taking off the road of Williston by developing this pipeline infrastructure network. And also we'll be using this for our own operations, but also offering this to third-party operators as well. So they will better actually sort of take some of the benefits of our infrastructure investments. Another part as well is that in the local community as well, we want to reduce flaring. We see sort of flaring as an issue that, from a Norwegian perspective, we have taxes on CO2, we have many initiatives from the government to reduce and cut out flaring on the North Sea. We can use similar techniques that we think we can employ from the North Sea over here to reduce flaring. One of them
and flaring, just for anyone that doesn't know what flaring is, I mean, that's when you're, literally just flaring, like burning the natural gas off as a as a byproduct.
That's right, Matt. Yeah, you'll burn it off as a byproduct on the side as you're producing your oil as well. And that's generally, most operators don't want to flare. We would prefer to actually put that into the pipe and actually sell it itself. We're developing infrastructure networks and cooperating with a company called OneOak, which is developing a lot of processing capacity in the region. So we will be, putting more and more of that natural gas and the NGLs from that natural gas as well into pipeline and selling it. But also we want to try and commercialize this natural gas as well. Since natural gas prices are so low, we actually want to be using natural gas to actually use something called gas lift, where we're pumping natural gas back into the well, into the vertical section, and actually this will be helping lift. Instead of using pump jacks, you usually see, the cliche of a pump jack all over those oil areas. We're actually trying to work with natural gas to actually bring up the pressure there and to actually produce a lot more. The other part as well is we're using natural gas also to develop some of our rigs. We actually can use natural gas to power locally on site. So that means cutting diesel, and also cutting diesel means cutting emissions as well. That's the kind of technology aspects of it. Where we're out in the community, we're working on some bigger plans and actually to engage deeper in the community. But even some of the small stuff that we do here and now and again is, just a few weeks ago, our manager of our Williston office, he was driving along there and through Williston, actually seeing the amount of trash on the side of the highway, and he said, this is just such a mess. We're closing the office. They closed the office. They all went outside. They drove out there on trucks. They pulled out some of their service supply companies as well, and they picked up trash all along the highway to clean this up. And it set off a chain reaction with other companies wanting to do similar kind of things. So all the small stuff that we want to do in the community, we would like to develop into something a bit bigger as well.
Yeah, and that's what I can sort of vouch from that from my side, and especially in regard to Statoil. You guys seem like you're sort of leading a lot of the new technologies, and especially a lot of the environmental technologies like flare reduction and, like you said, using natural gas to actually power the rig. So that's great to hear. It seems like not only are we seeing new technologies to produce more oil and gas that we could never have thought of 5 years ago, but we're also seeing new technology and new innovation for protecting the environment, and it seems like you guys are definitely leading the way in that. Switching gears a little bit, talking about New York State, they've banned the shale gas development with moratorium on fracking, but I've also heard rumors that New York City is set to be fueled by Pennsylvania's Marcellus shale gas. Can you explain that situation in the Northeast and tell us a little bit more about Statoil's role there?
Yeah, sure. There remains a moratorium on hydraulic fracturing in New York State, and there's a general environmental investigation impact assessment that they will be developing, and it's actually out for hearing at the moment within New York State. They're taking it slow. You can see generally in the Northeast, you've seen Pennsylvania has been an interesting state where they've really tried to manage the differences between what is very much a sort of blue collar industrial aspect of Pennsylvania and an environmentalist. It's a very sensitive area as well. So they've managed that in a pretty good way actually to develop the Marcellus, and it works well. We hope that will be a similar situation to New York, but we'll just wait and see with that. In the meantime, we have plenty of acreage, enough to develop in Pennsylvania and West Virginia. But what we've done here, when we first looked into this business, our analysts, we have a large market analysis and trading hub in Stamford, Connecticut. When we all got together and we discussed how we see the fundamentals of the Marcellus in the future, our analysts looked ahead and thought, okay, there's not enough pipeline in the area is one thing. You're going to produce a lot of natural gas. This thing is going to get big. You're going to probably see some backing up here, and also sort of excess supply in the area because the demand won't take it. So what we did there is we thought, okay, generally as part of our strategy in Statoil, we've always been happy to try and develop and find undersupplied high price markets, and actually put ourselves to actually putting long-term 20-year contracts together to get suppliers to actually build pipeline systems for us. So what we identified two particular areas of growth. One was Manhattan Island, New York itself, and the other we saw in Toronto as well. So within Manhattan, that's pretty interesting because the last time they only have one natural gas pipeline that crosses the river into Manhattan. That was constructed in 1958, and 50% of Manhattan, New Yorkers are getting the electricity actually from heating oil, which, as you probably know, has a very high CO2 content as well. It has a lot of,
and the price is quite high as well.
Absolutely, it's very high, absolutely compared to natural gas. So there's 8 million residents there. We see always high prices for natural gas. It's kind of a bottleneck market around there into New York. So we've actually started developing to get a pipeline over into the river and straight across into Manhattan itself. That will be probably ready within about a year's time. The other area we saw is particularly is a reversal of an existing pipeline from Toronto, which actually came down into the U.S. And we're seeing, the natural decline of conventional natural gas production from Canada. So we're reversing this out into Toronto for us. It got us into, a very profitable market. And actually, it's one of those things, you don't realize that Toronto itself was one of the fastest growing cities in North America at the end of 2011. It had like 132 high-rise buildings under construction, and it really has a huge growth potential, especially as natural gas is declining in Canada. So these kind of two areas are ones where we just had the foresight to think ahead. We're trying to do that for other areas as well, to get oil out of the Bakken and get that down into the Gulf Coast, and also we're doing similar developments as well in the Eagle Ford.
Wow. So looking at the big picture, backing up a little bit, what's your long-term goal for production from North American unconventionals?
For our sort of a whole of our North American business, our goal is 500,000 barrels a day in 2020, and of that, about 60% will be from our unconventional business here. So that's over a threefold increase on today's production we're expecting from the U.S.
Wow. So I'm looking forward to the next year, just a little bit further out. Is there anything else we should be looking forward to from Statoil?
Yeah, I think absolutely. We're going to be developing our assets as we are now, our three continuing assets. We'd like to see more growth in the Bakken. We would like to grow that asset. We'd like to grow the Eagle Ford in particular. What's exciting about the Eagle Ford is that we'll be phasing ourselves into operatorship mode. We'll be splitting acreage with Talisman, and we're taking on operatorship ourselves in one of the areas there. That's exciting for our organization to gear up towards operatorship and actually develop the technology that we would like to apply in that particular area and transfer that across between the other areas we're producing. But also, we'll see, I think, more deals. We're looking at more and more acreage in North America, but I think you're going to probably see potentially more stuff on the international scene as well. I mentioned the cooperation that we have with Rosneft. We have other areas, other shale areas in the world that we're looking at globally. So I think you're going to see something kind of interesting. I think the other part as well is that we want to. Statoil's not very well known in North America. We just have to admit that. We're kind of one of the best kept secrets, I think, in the oil business. It's a big company, but we want to be seen, we want to be known, and we want to be seen as actually an operator here. So on a branding kind of point of view, I think you'll be seeing a lot more of Statoil's brand and name out there in the North American context a lot more this year.
Wow, that sounds great. I heard you speak a little while ago at a conference on developing unconventional shale gas. From that speech, you were also saying that by 2020, 12% of Statoil's production will be coming from North American unconventionals. So when you look at that, it just seems like you guys are ramping up, and in particular at this timely point when it means a lot to get your foothold in the U.S. market. You guys have done that, and it seems like over the next couple of years you're going to be ramping up production and being able to leverage that into your international business and possibly even your offshore business here in the U.S. as well. So getting to my last question, is there any prediction that you could give us for the U.S. Shale boom and the unconventional scene here? Is this one thing that we always talk about at Daily Resource Hunter is, how long is this boom going to last? It's sort of a new thing for all of us. 5 years ago, natural gas prices were, it looked like we were going to be importing natural gas, and now it looks like we're going to be exporting natural gas. And not only that, but we've actually seen the decline curve of the the U.S. oil production, instead of heading on that downward slope that we thought was going to continue forever, it started to perk back up, and in the last couple of years, it's headed higher. So is this unconventional growth a flash in the pan, or a true long-term opportunity for American growth? And what can we expect to see happening here, just in the U.S. long term?
Well, I think it's this revolution we've seen with hydraulic fracturing and horizontal drilling, and the application of new technologies has been an amazing turnaround. And previously I'd worked in market analysis, and you try and draw supply demand curves and expect one to meet the other. And as we say, this completely blew everyone out the water with the revolution we saw in shale gas. As you say, Matt, expectations of large imports from Russia, Qatar, many other, North Africa as well, to bring in LNG to the US, and now we're talking about exporting it eventually. So it has been an absolute, amazing revolution, and I think we're still seeing the effects of that. As with kind of all revolutions, nobody quite understands it while it's going on. It's easy to interpret after the event and things die down. But let's look at the reality. 25% of our natural gas in the US is coming from shale. A good another 20-odd% is probably coming from tight gas. Coal bed methane has always been producing along, and we have a declining in conventional production itself. At the same time, we've seen natural gas supply increase, and also we've in the last figures from the Department of Energy showed actually expectations of 5% growth in natural gas demand. So natural gas has made an amazing impact, even in a short space of time. The demand side doesn't pick up as quickly as one would hope for, and that's because generally we just see switching from coal to natural gas, but we could see new technology, new applications in the long term. I mean, the US is sitting on an amazing resource here, and it's going to be, and we see it already, it's done a lot for bringing back the US out of a very tricky and difficult recession with very low energy prices. And and a sort of renaissance in investment from natural gas related industries. When it comes to the oil side, I mean, we're sitting with a Qatar basically up in, or Kuwait up in the middle of North Dakota. We're going to see, there's over 500,000 barrels a day being produced out of the Williston Basin today. Expectations are that will easily go to maybe 1.5 million barrels a day. It could be a brand new hub in that whole area for a new trading, new position that you'll see in the U.S. That you could be referring that to the flat price as opposed to the WTI price today. It's not a flash in the pan. We see, and I see it. I run with the economics, and we can see that this works. And the new and further application of technology and increased recovery rates means that this actually is going to get, actually better over time as well. How we crack the code with new shale plays will be interesting. Some of the new shale plays we're seeing in the U.S., some of these Mississippi Lime, the Granite Wash, there are many other shale plays already existing in California and others around in the Rockies as well. It's the size of these things. The business model that we need to have if you're going to develop a smaller play will be essentially you're going to have less time on experimentation. You need to know what you're doing pretty much straight away and actually start turning a profit as quickly as you can to develop these resources in the right way. This is going to be the kind of thing that we expect to win at as well. We expect any company that has a good grasp and understanding of technology and can apply that as quickly as possible with the technology partners in the market. Actually, they're the ones we're going to see as the winners. So, as I said, on the big picture, unconventional resources, there's a huge amount of resources in the world from China to South America to Australia, in Europe. Some areas are easier to probably develop than others because of above surface risk. But we think really that this shale revolution is here to stay.
Wow, that's great to hear. It's also, just from a standpoint of Statoil, you guys have been in the right place at the right time, it seems like, and being able to leverage this technology looks to be great going forward. But it's good to hear just from a specific company standpoint that the boom that we've seen over the last couple of years seems to be headed in the same direction. It's just going to create opportunity for investors, create opportunity for companies like Statoil, and just the American economy in general. So, Stephen, I want to thank you for your time here. We appreciate talking to you.
Thanks so much, Matt.
To make sure you're on the front lines of the next big natural resource opportunity, we urge you to visit us at dailyresourcehunter.com and sign up for our free daily e-letter. In it, you'll find our latest field reports, whether it's the hunt for gold in South Africa or drilling for oil on the high seas. With Daily Resource Hunter, you'll enjoy a front row seat to today's best resource opportunities. Visit us at Daily Resource Hunter today.